Every country thinks its housing crisis is unique. Every city believes that what's happening to them is somehow special. But open any rental website in almost any major city, and you see the same thing. New York? A shoebox for the price of an organ. London? You pay half your salary to live in a hallway. Barcelona? Locals pushed to the outskirts, while tourists sleep in the center. Berlin, Sydney, Toronto, Paris, São Paulo, different languages, same pain. Politicians blame each other. Twitter blames landlords. Landlords blame regulations. Developers blame bureaucracy. Everyone has an enemy, but nobody has an answer. Here's the uncomfortable truth we're going after in this video. Rent is not impossible because one group suddenly became evil. It's impossible because, step by step, we turned housing into the nervous system of the entire economy. To understand what that really means, we're going to 4 cities, 4 very different stories, and one hidden engine that quietly connects them all. Let's rewind a few decades before everything mutated. For most of human history, a house was just a house. You lived in it. Maybe your parents left it to you. Maybe you slowly paid it off. Nobody talked about leveraging home equity at dinner. Owning property was important, sure, but it wasn't treated like a lottery ticket or a retirement fund. It was a place where life happened. Family arguments, birthday parties, kids growing up, quiet nights, noisy neighbors. Then something began to shift. Governments started pushing home ownership as the ultimate dream. Banks realized they could lend huge amounts of money backed by that dream. Investors realized those loans could be packaged and sold. And ordinary people realized their house wasn't just shelter. It was going up in value faster than their salary ever could. The moment a home became a financial strategy, instead of simply a place to live, the logic changed completely. Housing stopped answering the question, can people afford to live here? And started answering a very different one. How much money can be extracted from this square meter over time? Everything that follows, every insane rent price, every impossible lease, every generation feeling locked out, comes from that shift. New York is not just a city. It's a financial laboratory, and one of its favorite experiments was turning housing into a machine for generating profit. In a normal world, you build a building, people move in, they pay rent, the story ends. In New York, you build a building, and that building becomes a cluster of financial products. Mortgages get bundled into mortgage-backed securities. Those securities are sliced into tranches and sold around the world. Real estate investment trusts buy thousands of units and pay dividends to shareholders. Private equity firms buy entire blocks, flip them, refinance, extract equity, repeat. On paper, it's elegant. Bricks become numbers, numbers become charts, charts become profits. But for the people actually living there, it's suffocating. Because the price of housing is no longer set by what a nurse or a teacher can afford. It's set by investors chasing a specific rate of return. If that return requires higher rent, the rent goes up. If that pushes people out, the market calls it natural adjustment. New York reveals the first big truth. Once housing is fully financialized, rent doesn't follow income. It follows whatever number makes investors happy. Walk through New York with this in mind, and the city looks different. That couple sharing a tiny studio while both work full-time? They're not bad with money. They're paying rent not just for their walls, but for the interest on some investor's debt. Those 4 roommates squeezed into a 2-bedroom in Brooklyn? They're not refusing to grow up. They're absorbing the cost of keeping real estate prices inflated. Evictions, overcrowding, people commuting 2 hours from faraway towns. These aren't random social problems. They are side effects of a design where housing must deliver yield, quarter after quarter, year after year. Nobody voted for this system directly. There was no referendum that said, "Do you agree your home should be turned into a financial instrument?" But that's what happened. New York shows us how far the logic can go. Buildings don't exist because people need to live in them. They exist because someone wants to extract money from them. And when that's the core logic, of course rent feels impossible. It was never meant to be easy. Now we cross the Atlantic to London, a city that didn't just financialize housing, it turned it into a global safety deposit box. For decades, London marketed itself brilliantly to the world's wealthy. Strong legal system, stable politics, prestige, an English-speaking bridge between the US, Europe, and the rest of the world. If you were a billionaire in an unstable country, buying a flat in London wasn't about living there, it was insurance, a backup plan, a way to store wealth somewhere no one could easily touch it. So money poured in, from Russia, China, the Gulf states, Europe, the Americas. Entire buildings in prime areas were sold unit by unit to people whose main question was, is this a safe place to park capital? Lights off at night, blinds closed, keys unused. But on paper, everything looked fantastic. Prices were up. Investments were secure. London was booming, except for the people actually trying to live there. London's housing market stopped being a reflection of what Londoners could pay. It became a reflection of what the global elite were willing to pay to feel calm about their money. Imagine being a young Londoner in this context. You get a decent job. You work hard. You try to save. You do everything you were told would lead to a stable life. And then you discover the truth. You're not really bidding against other locals for a place to live. You're bidding against a faceless spreadsheet in another country. That spreadsheet doesn't care about commuting times, friend groups, or your emotional attachment to the city. It doesn't care if the building stays empty half the year. It only cares that the underlying asset looks stable and scarce. This is why entire parts of London feel ghostly at night. Blocks of luxury flats with very few lights on. It's not that London doesn't have people. It's that much of its housing never truly enters the rental market at all. London teaches us a brutal lesson. When your housing market is used as storage for global wealth, local life becomes a secondary consideration. And again, rent becomes impossible. Not because individuals suddenly got greedy, but because the system was calibrated to serve money, not residents. Now we head south to Barcelona, a city with a totally different personality, and somehow the same fate. Barcelona didn't start as a playground for funds or oligarchs. It started as a normal Mediterranean city. Then low-cost flights arrived. Then global tourism platforms. Then viral social media posts. Within a decade, Barcelona went from cool European destination to global tourism fantasy. The old town, the beach areas, the trendy districts, all flooded with people who were happy to pay high nightly rates for short stays. Enter Airbnb. For a small landlord, the math was simple. Why rent long-term to a local for €900 when you can make double or triple from tourists? Locals with one spare property turned into micro-hotel operators. Big players entered and scaled it. Some blocks quietly shifted from neighbors and families to rolling waves of weekend guests. Little by little, the stock of housing available to actual residents shrank. But demand from locals didn't. So prices had only one direction to go. The numbers are one thing. The feeling is another. Talk to people who grew up in Barcelona, and you'll hear the same story. This neighborhood doesn't feel like mine anymore. Bakeries become brunch spots, corner bars become themed cocktail places, shops selling daily necessities become souvenir stores. The sounds change. less local conversation, more rolling suitcases. And behind that cultural shift is a simple economic reality. Housing is more valuable as a short-term tourist product than as a long-term home. If you're a young person in Barcelona today, you might live an hour away from the center, even if your job and your friends are in the city itself. Not because you want to, but because the numbers pushed you there. Barcelona shows us that you don't need hedge funds or billionaires to break a housing system. You just need a city that makes more money hosting people temporarily than keeping them permanently. And once that switch flips, rent for locals stops being a priority. So what do we have so far? New York, housing as financial product. London, housing as global wealth storage. Barcelona, housing as tourist commodity. 3 different engines, 3 different cultures, 3 different crises. And yet, the same result. Normal people can't afford to live in the cities they power. The invisible thread tying all of this together is simple. Housing is no longer valued primarily as shelter. It is valued as an investment, a store of global wealth, a tourism platform, a retirement plan, a collateral asset, a tax base, a macroeconomic tool. And your income, your human effort, your contribution to society, is now just one tiny variable among many. Whenever there's a conflict between people need somewhere to live and assets need to keep going up, guess which side wins? There's another piece almost nobody talks about, because it's boring on paper and devastating in real life. For roughly 40 years in many countries, wages for ordinary workers barely moved in real terms. Productivity increased, economies grew, stock markets flourished. But median incomes crawled forward like they had ankle weights on. Housing, on the other hand, took off like a rocket. So even if you did everything society told you to do, study, get a job, work hard, avoid debt, save money, you still feel like you're running on sand. Your grandparents could sometimes buy a home with 3 to 5 years of salary. Now, in many cities, it's 10, 15, 20 years, if you qualify for a mortgage at all. Rent is the monthly expression of that gap, the space between what the system wants housing to be worth and what your labor is worth. Rent feels impossible because the economy rewarded owning things, not doing things. And most people were pushed into the doing side. At this point, it would be easy to say, well, that's just how the world works now. Tough luck. But then Tokyo walks into the chat and says, actually, no. Tokyo should be a housing hell. Huge population, enormous metro area, strong economy, tons of demand. And yet, Tokyo has done something almost no other megacity has managed. It kept rent relatively stable. The secret isn't magic, it's policy. Tokyo made it comparatively easy to build. Zoning laws are flexible. Neighborhoods can densify. Permits are faster. Taller buildings are allowed where they make sense. In short, when people needed more housing, Tokyo built more housing. Not 10 years later, not after endless neighborhood vetoes, not with 1,000 bureaucratic roadblocks. The result? There's still competition for good locations, but the overall pressure never reached the desperate levels seen in Western cities. Tokyo treats housing like a service the city must provide, not a puzzle for investors to optimize. So if Tokyo cracked part of the code, why doesn't everyone just copy it? Because copying Tokyo means breaking the comfortable illusion that rising housing prices are always good. Politicians love rising property values. Homeowners feel richer. Banks feel safer. Developers feel powerful. Governments collect more tax. If you suddenly flooded a Western city with new housing, 2 things would happen. Rent would fall. A lot of very powerful people would panic. Lower prices mean some homeowners end up underwater on their mortgages. Banks worry about the value of their collateral. Pension funds take a hit on real estate investments. Governments lose tax revenue tied to inflated values. Most countries looked at that trade-off and decided, quietly, that it's easier to let renters suffer than to let assets deflate. So they keep announcing housing plans, but somehow never build enough to change anything fundamental. They are managing a crisis, not solving it. So where does that leave you? If you're struggling with rent, you're not crazy. You're not a failure. You're not uniquely irresponsible. You're living in a global system where your home is treated as a multi-purpose financial instrument. Your city is treated as an opportunity for extraction, and your salary is treated as a detail. New York, London, Barcelona, they're not accidents. They're warnings. Tokyo, Vienna, a few rare exceptions. Those are proofs of concept that another path exists. The real question isn't why is rent impossible? We already know why. The real question is, will enough people get tired of this game to force their cities to stop playing it? Because until that happens, the rent crisis won't feel like a glitch. It will feel like the default setting. And that is something we'll keep exploring in another episode.